Alright, dear friends, as I mentioned earlier, today we're going to practice a new strategy using Heikin Ashi candles. To use this strategy, we need to switch the candles from the standard candlestick type to Heikin Ashi, as I've already done. We'll also set the time frame to 1 minute, but our trade duration will be 2 minutes. So while our candlestick time frame is set to 1 minute, the trade time will be 2 minutes. I'll be teaching this strategy using the quotex broker, and I'll also perform a few trades using this method. However, you can use it on any broker you prefer. For this strategy, we need an indicator called parabolic SAR, which you can see here. I'll continue with its default settings, no need to change anything. I'll just increase the size of the parabolic SAR dots a bit so that you can see them more clearly in the video. I think the color is fine, but I'll make it a bit brighter for better visibility in the video. Other than that, we'll stick with the broker's default settings. Alright, let me change this as well so we can see it more clearly. Alright, there are a few key points to keep in mind when using this strategy. First of all, friends, in a previous video, I talked in detail about Heikin Ashi candles. If you haven't seen that video, I highly recommend watching it. You need to learn the 5 rules of Heikin Ashi candles and understand the difference between Heikin Ashi candles and regular candlesticks or Japanese candlesticks, as well as how their structure is formed and how they are created. So, if you haven't seen that video, I suggest you to watch that video. I will put the link above the video so that you can easily find it and watch that video to get to know Heikin Ashi. First, to use this strategically, we are looking for pivots. If I want to say it more simply, we are looking for valleys and peaks. Either we look for a floor or a roof. And after we find a suitable roof or floor, now I will explain to you how. We also get help from this parabolic SAR indicator to find the entry point to our trade. The first important thing is to observe that a trend reversal has occurred, like here in the video. You can see that a downtrend came all the way down to this point and then turned into an uptrend. In this situation, we should have at least 3 or 4 red candles followed by green candles, and a valley or bottom should have formed here. That's the first key point. In the opposite case, the same applies. For example, here we have an uptrend with several green candles, and then it transitions into red candles. The minimum number of green candles should be 3 or 4. If there are only 2 green candles, or if there are red candles mixed in between, it's not valid for us. This is a very important point to keep in mind. The second point is that after this situation occurs, like we see here with a series of red candles, like more than 4 transitioning into green candles, the next thing to check is that the green candles should have no lower shadow. At least 2 of the green candles should not have a lower shadow. Usually when the trend reversal happens, the first green candle may have a lower shadow, but the second and third candles are most likely shadow free. This applies to green candles where no lower shadow should be present. The upper shadow of the candle doesn't matter for us in this strategy. We only care about the lower shadow. If the green candles have no lower shadow, this condition is met. Here you can see that both conditions are satisfied. The green candles have no lower shadow, and we see that the parabolic SAR dots are still above the green candles. Look at the last point of the parabolic SAR. It's marking dots above each candle. At this stage, we do not enter the trade. Once the parabolic SAR dots move below the green candles and the green candles have no lower shadow, we are allowed to enter a 2-minute upward trade, an up or buy trade. As you can see, if we had entered the trade here or even on the next candle, we would have easily made a profit. The opposite of this scenario is also true. Here we can see that the green candles transitioned into red candles. In this case, the rule is reversed. The red candles should not have an upper shadow. The first red candle has a small upper shadow. The second one doesn't. The third one has an upper shadow again, and the next one doesn't. However, we can still see that the parabolic star dots are below the red candles. At this point, the parabolic star should move above the red candles for us to consider entering a trade. So far, the red candles have no upper shadow. The first two conditions are met, but we cannot enter the trade yet because the parabolic star is still below the candles. Once the dots move above the candles, we can enter a 2-minute sell trade. As you can see, if we had entered the trade at this point, even if this candle closes green, our trade would still close with a profit. But an important point here, which I can explain well with several examples, is this. Once again, the green candles have turned into red candles, forming a peak and signaling a trend reversal. We can see that there are 2 or 3 red candles without an upper shadow, meaning the first two conditions are met. Many of us might make the mistake of thinking that it's the right time to enter a trade. However, the parabolic star is still below the red candles. If we had entered the trade at this point, we would have ended up with a loss. So, all the conditions I'm explaining must be followed precisely, and we need to stick to the rules of this strategy exactly. Every detail is important. For example, here we see red candles turning into green ones, and it seems like a trend reversal has occurred. The green candles have no lower shadows, and the parabolic star is below them, but we still shouldn't enter a trade here, even though we might have profited if we did trade. Why shouldn't we? Because our first rule is that a proper trend reversal must have occurred. These candles aren't valid because, as I mentioned, there must be at least 3 or 4 consecutive red candles before the green ones. Here we only have 2 red candles, then 1 green followed by 2 more red and 1 green. These aren't acceptable conditions for entering a trade, and even though a trade here might have closed in profit, the risk was high, and we should avoid trading in such situations. However, as I was explaining, these candles have now closed. From the point where the parabolic star moved above the candles, if we had entered a 2-minute downward trade on this candle or even the next one, our trade would have closed with profit. You can see that after these 2 doji candles, the market dropped again. These were the general explanations for this strategy, friends. Now I will look for suitable opportunities on different charts and perform a few trades for you. If I come up with any additional explanations during the trades, I'll mention them as well. Stay with me until the end of this video so we can go through a few trades together and see how it works. Alright friends, I've opened a trade here, although I was a bit late and couldn't enter right at the start of the candle. However, we can see that we had an uptrend, a trend reversal occurred, and the peak we were looking for has formed. We have a red candle with no upper shadow, and the parabolic star has moved above the candle. I've opened a 2-minute downward trade, and now we'll wait to see the result of this trade together. It seems that all the conditions I mentioned are present here. The number of green candles is more than 3 or 4, the trend reversal has occurred, the red candle has no upper shadow, and the parabolic star has moved above the red candles. Let's wait for the 2 minutes to finish and see the outcome of this trade. To easily and freely register with the Quotex broker, click on the link in the video description. As you saw, our first trade closed with a profit. Now let's check another chart to see if we can find another good opportunity and place another trade. Alright friends, it seems like a good opportunity is forming on this chart. As we can see, there's an uptrend with a large number of green candles, and now a trend reversal has occurred, forming the peak we were looking for. Now the red candles are starting to form. The first red candle has no upper shadow, which is in line with the conditions of our strategy that I explained earlier. The parabolic star is currently below the candles, and as soon as it moves above the candles, we can place our trade. Let's wait together to see when this happens. It seems this isn't a suitable opportunity for trading. As we can see, an upper shadow has formed on our candles and the next one turned green, so the conditions weren't met. However, there's an important point to notice here. Even though the first red candle had no upper shadow, If we had rushed and entered the trade on that candle, our trade would have closed at a loss. This is why it's crucial to wait for the parabolic SAR to move above the candles, which didn't happen, and the trend turned upward again. But looking at this part of the chart, you can see that earlier, a trend reversal from downtrend to uptrend occurred. The parabolic SAR moved below the green candles on this candle, and if we had entered a trade on that candle or the next one, we would have made a profit. Then another trend reversal happened here, where the red candles formed without upper shadows. At this point, the parabolic SAR moved above the red candles, and if we had entered a trade on the following candle, it would have closed successfully with a profit. Again, we see similar conditions here with this trend reversal. On this candle, there's no lower shadow, and on this or the next candle, the parabolic SAR has moved below the green candles. If we had opened a trade here, it would have closed with a profit again. So just in this small section of the chart, you can see three clear signals that could have given us excellent trading opportunities. We could have made 3 successful trades with solid profits on each. This strategy requires a bit of time, patience, and focus to sit and wait for the perfect conditions to be met before entering a trade. If I had rushed and opened a trade on this candle, I would have surely faced a loss. But the parabolic SAR helps us here by preventing us from trading before it moves above or below the candles. Now it seems like this chart has lost its structure and no longer aligns well with our strategy, as we can see 2 red candles followed by 3 green candles and then another red one. I'll look for another chart to find a better opportunity for a trade. Alright guys, we can see 3 red candles here followed by a green candle with no lower shadow, and the parabolic SAR is below the candles. If this green candle closes without a lower shadow, I'll open a trade on the next candle. Alright guys, as you saw, this trade also easily turned into a profit. But there's one more thing I want to mention, which just came to mind, and I forgot to explain at the beginning of the video. If you want to get better results with this strategy and reduce your risk, try to pay attention to the overall trend as well. For example, when the trend is upward like it is here on this chart. So I noticed 3 red candles had formed, the parabolic SAR was below the candles, and the green candles had no lower shadows. I immediately placed an upward trade, which closed with a profit. In an upward trend like this, try to focus on following the trend. Look for opportunities where the strategy is giving you buy signals during an upward trend, and if the trend is downward, look for points where you get sell signals and place a downward trade. In some situations, it might be risky. For example, here we can see the uptrend is strong and these red candles don't have upper shadows. Even though the parabolic SAR hasn't moved above the candles yet, if it had, and we had placed a downward trade, we would likely have faced a loss. In such cases, if you want to reduce your risk, try to trade with the trend. Even though the parabolic SAR typically follows the trend and doesn't give signals against it, mistakes can still happen, and we could encounter some challenges. But if you always trade with the trend, for example, when the trend is upward, you should look for downtrend reversals turning into uptrends. As long as the parabolic SAR is below the candles, like here, you can place a buy trade. Similarly, when the trend is downward, look for points where green candles transition into red candles, where the red candles have no upper shadows and the parabolic SAR moves above them. Right now, this is a good opportunity for a downward trade, but since the trend is upward, the risk is higher compared to earlier setups. I'll place a downward trade on the next candle, and it might end in profit or loss, but I want to demonstrate this important point. I forgot to explain it at the beginning of the video, but it's crucial that you understand this concept fully. If the trade results in a loss, that's fine because it will help illustrate the importance of following the trend. Alright, I've now opened a 2-minute downward trade and will wait to see the result. But as you can already see, the price is moving upward, which is exactly what I just explained. The green candles turned into red candles, and 2 red candles had no upper shadows. The parabolic star moved above the candles, and everything according to the strategy indicated that we should open a sell trade. However, we didn't pay attention to the fact that the trend was a strong uptrend, and we should never trade against the trend. This is a very important point. I purposely opened this trade knowing there was a high chance of a loss to demonstrate this to you. I explained it earlier, so always make sure to trade with the trend. In an uptrend, look for points like here or here where entering a trade would have resulted in profit. For example, here we have 4 red candles. The parabolic star is below the candles, and if we had entered on this candle or the next, we would have made a profit. This is exactly what happened with our previous trade. However, in this case, even though we had all the signals, the trade resulted in a loss because we went against the trend. This reinforces the importance of always paying attention to the trend, guys. This trade has ended, and we lost $1 here, but that's okay. The important thing is that the concept is now fully clear to you. I believe I've explained everything about this strategy in detail, and it's actually good that this happened. I had forgotten to explain this earlier, but now I was able to show and explain it at the end of the video, including the loss, so that you can completely understand the idea. I hope you enjoyed watching this video. Please make sure to use this strategy, starting on your demo account first. I'd really appreciate it if you could share the results of your trades in the comments below this video.
Dear friends, to make sure you don't miss any of our videos, please subscribe to the BS Academy channel. Also, activate the notification bell so that you are informed as soon as we publish new videos. Thank you for your support.
Introduce the BS Academy channel to your friends. Take care of yourselves, and goodbye.